What is going on, investors? Hopefully you guys having a great day out there. Time to keep earnings season rolling along here when we take a look at Verizon Communication, ticker symbol VZ. AT&T will be tomorrow, so if you're looking forward to that, we'll be talking about them as well. Now, on today's video, we'll talk broadly about Verizon. What kind of stock is it? How you can use it in your portfolio? Because when we jump over the stock chart on this one, I want you to notice that I'm on a weekly view on this stock chart, and here's where the stock chart starts here. Back in 2018, this is October 2018, and here we are on the right-hand side where we are at the current day. You'll notice this stock has been between $53 and we'll call it $62 for nearly 3 years now. And so it's been locked in an $8 range. Now, has it broken down below? Sure. Has it peeked its head up above? Yes. But for the majority of that time, it has been in a very, very tight range. And so we'll talk about, is a stock like this belong in your portfolio? How you can use it in your portfolio. Now, they did report first quarter earnings today, and they were actually pretty good. They had this Fios internet service that is giving some strength. They're seeing some strength basically across the board over at Verizon. When we jump into the numbers, we'll take a look, and they are very strong from an operating revenue perspective, from a gross margin perspective, from every metric. Things are actually looking pretty good for Verizon, and so we'll dig deep into this. Now, what they did have to do in the most recent quarter is they spent a gigantic amount of money. They spent $45.5 billion during a spectrum auction back in February. I'm going to show you, so you're going to wonder, like, okay, $45 billion, holy cow, that's a lot of money, okay? This is a company in a 3-month period earns $32 billion, so they spent more money in one day than they make in an entire, way more than they make in an entire quarter. So I'm going to show you, like, where does that money go? Like, how does that affect the financials? So we'll talk about that as well. Now, here's where we'll talk just broadly also about Verizon. What kind of stock is it? And it's constantly topping these kind of lists and these kind of things that investment managers and magazines and investment shows kind of put out there, is that it is a dividend income stream type stock. It is kind of like a buy and hold type stock, or if you're someone closer to retirement, you dump some money into that and you kind of cash the dividends out. Because when we take a look at Verizon, we are paying $2.51 per share. That is a 4.3% yield at today's price. Given that interest rates are still very low, 10-year yield, I think, is at 1.5% or so. That is tremendous, okay? So you're getting about 62 cents and some change per quarter on this one. That is very strong. And we talked about the spectrum auction. They've obviously got to pay you out as the shareholder, but they've got to reinvest in the business as well. I'll tell you how I use Verizon shares. Now, I'm 39 years old. I'm not necessarily close to retirement. I do have some retirement savings. I do have Verizon in a retirement account, a very small percentage of it there. I'm still focused primarily on growth stocks, Microsoft, Apple, Amazon, those types of things. Those of you who've been following the channel know what I tend to invest in. Now, but here's the thing. I became a father a few years ago. I have a mortgage. I have bills to pay. My wife doesn't work. So I am responsible primarily for the finances of our household. And so I set aside way more cash these days than I did 4, 5, 6, 7 years ago when I was just a single guy. I didn't have a care in the world. Now I've got things that I need to take care of. And if you happen to lose some income, you do want to have some cash sitting there on the side just to keep things moving, especially when you have kids, a mortgage, those types of things. So here's Verizon in an account that I have with Charles Schwab. I have 20 shares of this. Now, what I noticed is I did not have dividend reinvestment turned on because my cost basis on these 20 shares is $111. I bought these back at 7/23 of 2020. So, several months ago, bought these last year. This is basically cash that I had, that I was just going to have sitting in my bank account for a quote unquote rainy day. And you see here that I've made $52. This is just in capital appreciation. This does doesn't include dividends because, like I said, I'm glad I'm actually doing this video because I'm going to go turn dividend reinvestment on this investment because I clearly don't have it on. I would have 20 and some fractional shares here on this one. So I will go and change that. But my market value on this one is $1,164. Again, I've made $52. If I had this just sitting in a bank account, just sitting in cash, I'd have like nothing. I'd have barely more than $1,111 because checking accounts, saving accounts basically pay no interest. And so that is how I use Verizon. I use AT&T. I use other dividend paying stocks is I park money in it. I get a little bit of capital appreciation. Unfortunately, I can't illustrate the dividends, but I've earned, probably a few dollars worth of dividends on this as well. That is personally how I use Verizon. So there is room in everybody's portfolio for stocks like this. Now, if you're a young guy, young girl, and you're just getting going, look, maybe not today, but it is important that you develop these things over time. This is like the maturity and the growth of investors, in my opinion. Now, let's jump into these Q1 numbers. Okay, we got the statement of income here. So we've got our operating revenues up here, and we've got our total operating revenues right here. We've got 3 months. This is last year. And then we've got 3 months. This is the most current quarter, the most current year. We're seeing here service revenue and other. This is their big, gigantic revenue drivers, 1.6% growth. Okay, this is why this stock has basically been in a tight range for almost a year now. Is because we're not growing a whole lot up here on this top line. Okay, our wireless equipment revenues, that grew 19%. But here's what I want to point out to you. Cost of wireless equipment, okay, $5.5 billion, and we made 4.9. So it's a loss leader, okay? They basically give away equipment for internet service and those types of things to generate these top line revenues, because you see cost of revenue there, we spent $8 billion to make close to $28 billion. So that is very, very strong. Now, what you want to take note is we grew that top line by 1.6%, but unfortunately our cost of service actually went up a little bit in the most recent quarter to 3.4%. Our cost of wireless equipment went up 21%, but here's how they balanced it out over Verizon. Our selling, general and administrative expenses, try to say that about 4 or 5 times fast, down 13.8%. So they really, really controlled cost over at Verizon in the most recent quarter, especially compared to last year. So we've got these total operating expenses essentially flat, rounding error flat, up just 0.3%. So this is nice. We grew our top line by 4%. We grew our operating expenses just fractionally, basically flat. What's that going to mean? What should that mean? Operating income up considerably, okay? Up 18%. Take a look at that. We went from $6.6 billion to $7.7 billion in operating income. That is an extraordinarily strong quarter for Verizon. Now, we have to pay interest. Okay, this is a company we'll talk about here in a minute. Again, we talked about how they spent $45 billion. Okay, they don't have $45 billion in cash over Verizon. Actually, not many, believe it or not many companies do. I would say only, I think Microsoft comes to mind as a company that might have that much cash. Maybe Apple these days as well. There's not many companies with that much cash sitting on the balance sheet. So they have to borrow lots of money. So this interest expense line is actually pretty significant. And you see here, it is up 6.5%. So Verizon is a little sensitive to interest rate increases. Not necessarily something I would worry about. Interest rates are still historically low, but if we were to see them continue to drastically rise, it is something that Verizon might have to worry about a little bit. Take a look, $1.1 billion in a quarter that they spent on interest. You better believe that the bankers over at Verizon absolutely love them, because that is over $4 billion that they spend on interest. That leads to net income of $5.3 billion. After we pay taxes, we pay our interest. Off of this $7.7 billion, we made $5.3 billion. That is 25% above where we were in the previous period. Now we come down to earnings per share. Again, not a net metric I typically use for a wide purposes. What I tend to use it for is actually dividend purposes. Okay, we earned $1.27 per share. This is a stock that's paying $2.51 per a year. So in a quarter, you make $1.27, and for a whole year, you're paying $2.51. Guess what? They actually have a fair amount of money to not only pay you, the shareholder, but also reinvest in the business as well. Now, let's come down to the balance sheet. Okay, we talked about how they just spent just a $45 billion spot on some Spectrum Airways. So you'd imagine that the balance sheet kind of got blown up a little bit. And if you imagine that, I think you're absolutely correct. So we've got our asset side. We've got cash and cash equivalents. Guess what? That went down $12 billion. You can probably imagine where some of that cash went. Some of it went to either refinancing some debt or paying off some of those Spectrum Airways. Now, again, they spent $40 billion, and we only see a decline here of about $11 or $12 billion. We've got accounts receivable. So this is just shows you how much money they've got coming into them over the next, we'll call that 12 months or so. Customers, businesses, those types of things. We've got total assets ticked way down. Again, we have this big, gigantic drawdown on our cash, so our total assets, total current assets went down quite a bit. Now, total assets down here actually are up about $29 billion, because here's what happens is when you spend this cash on things like Spectrum and things like that, it does get flowed down. It is kind of like, it does become an asset too. So it balances out a little bit on this end. Now, from the liability perspective, here's where things get interesting. So our total long-term debt, you probably imagine, well, guess what? They spent $45 billion on some Spectrum. The United States government's not going to take an IOU for that. And so here we go. $26 billion got bolted onto our long-term debt. Guys, this is not 149,000. This is not 149 million. This is $149 billion worth of debt. That is a lot. That is a lot of debt. So that's just one thing to keep in mind. That is also why stocks like this are in a tight range, because they are in a tight spot in terms of their balance sheet. They have to borrow lots and lots of money to run this type of business. Now, they have this debt maturing over 1 year. They've got about $8.8 billion of it maturing over 1 year. That's about $3 billion more than the previous period. Now, where you're going to get a better view, even a better view of where this cash flowed. Okay. Again, we talked about how they spent all this money on this Spectrum auction. We saw evidence of that on the balance sheet. You're going to get even more evidence of here on cash flow. So here's our cash flows from activities. So we pull down that net income number, which was fantastic. $5.3 billion, over $1.1 billion, about $1.1 billion more than our previous period. We get to add back things in like depreciation, which are not cash. That gives us net cash from operating activities sitting at $9.7 billion. That's over where we were in the previous period at $8.8 billion. Now we've got this investing activities. Here's our acquisition of wireless license. Again, I told you they spent roughly $45.5 billion on the cash flow statement. We see here the acquisition of wireless license coming in at $44.8 billion. So big time increase over the previous period. You see here, we spent close to $50 billion in investing activities. Last quarter that we have on record here, $7 billion. Okay, so you're going to see a lot of activity down here in financing activities, because how are they going to have to pay for that? Okay, they didn't pay for it with $9.7 billion in cash flow in the quarter. Okay, $9.7 billion in cash flow. You spent $49 billion. Okay, so you're going to have to borrow some money. So here's our proceeds from long-term borrowing. Went from 5.8 all the way up to $31 billion. Hello. And then here's our dividends paid as well. So in a more normal quarter, okay, where we're not spending $45 billion on assets, wireless assets, and Spectrum, here's what you want to think about is we pay $2.6 billion to you, the shareholders. Okay. They have to pay some interest. They have to pay some debt off, but they still have this $9.7 billion worth of cash flow. So I know to maybe a novice investor, a beginning investor, this looks really scary that we spent $49 billion in a quarter. We only made $9.7 billion. Okay. We borrowed $31 billion. I tell you what, if you were like a consumer, if this was like an individual, a household, I'd be very concerned. Even if these numbers were as written, this is 9,000, this is 49,000, this is 31,000, but you got to understand how this business works. Okay. They have to pay tons and tons of money up front in order to generate these types of revenues. And the other thing to keep in mind is they are basically, I think the term is maybe oligopoly, is basically T-Mobile, AT&T, and Verizon are essentially the only three, and by only, I mean the vast majority, I would guess well into the 90% range of cell phone wireless internet flows directly through these companies. And so that is something that you want to keep in mind is they have to spend lots and lots of money, but they have a massive competitive advantage because they are one of only a handful of companies that essentially are allowed or have the capability to service these markets. Now, jumping over the stock chart, here's a couple things that I'm seeing here is this thing has been on a pretty nice rally. And here we are, we're sitting right here, right around where my cursor is about $58. The stock's basically flat today. It has been on a pretty nice move. Okay. Here's just broadly, I'm not going to make this long analysis because this is a pretty simple thing to understand. When this stock comes down to about $52, $53 per share, I think it's potentially a buy. Okay, because here's where it's about this area. Look, we bounced here. This is March. Okay, this is March of last year when a lot of stocks sold off very hard. Okay, a lot of stocks sold off down in this range. So these candles are somewhat unique. But we bounced here at $52, $53 consistently for the last 3 years. Okay, where do you think you might want to sell this stock? Okay, if you want to sell, not saying necessarily a great idea, but if you want to sell Verizon, if it's something that you got some capital appreciation, you want to dump maybe the money into something else. You're like me, you have maybe $1,000 into it, you get some capital appreciation in it, and you're like, well, maybe I could shift this into a little bit more value-oriented dividend-paying stock and then get that capital appreciation and a bigger dividend. Well, you'd sell up here at $61, $62, somewhere in here. So we're really, literally, we're like $2 away from where we're in a position with Verizon where you could potentially sell this one as well. Because every time it has come up here to $61, $62 without failure and really without much hesitation. Okay, because we're on a weekly chart. This is 1-2 weeks massive sell-off. 1-2 weeks massive sell-off where we're going from $62 down to $54 in a matter of weeks. So we'll see if that materializes. I tell you what, you come up here to $61, $62, probably not that bad of an idea, especially if you have an alternative in mind. You want to rotate into a REIT. You want to rotate into some other company that you might like a little bit better than Verizon, at least from a capital appreciation perspective. But if you want to buy and hold this one, collect this 4% dividend, again, I would add these shares at the bottom end of the range. You're going to get a better price appreciation in the long term, but more importantly, you're going to get better yield for your money. Okay, as it comes down into this range, you're probably getting darn near close to 5% yield on this, maybe even excess of that. That is really nice. And as I showed you on the balance sheet, they have plenty of retained earnings to actually grow this dividend over time. And so several years from now, this dividend will be even higher than what it is today. So hopefully you guys enjoyed Verizon. We'll be back again tomorrow with AT&T. I'll slip T-Mobile in there too. They're actually doing a really nice job with that company. So we'll talk about all of those companies in the coming weeks ahead. Hopefully you guys enjoyed the video. Good luck with your investments.